Hi everyone, my name is Nikou Asgari. I'm the Digital Markets Correspondent at the Financial Times, and I'm joined here by Jenna Wright, Managing Director at LMAX Digital. And we'll be discussing the tokenization of capital markets, looking at crypto as a proof of concept. Well, I mean, tokenization is an incredibly hot topic. It's what almost everyone has been talking about the past 2 days. But there's relatively few conversations, I think, about crypto, which is where this all started and kind of how we're all here. I'm interested, Jenna, in how the conversations that you've been having over the past year or so have changed, given how much the market has changed.
Yeah, sure. Hi, everyone. Thanks for having me. Just to put everything into context about who we are and what we do, we come from a TradFi background, and we have been operating FX exchanges around the globe since 2010. In 2017, we had some of our FX clients, HFT type clients, so non-banks, asking if we could essentially bring our software and create an exchange that looked and felt like how they traded FX with us for crypto. So not for us to compete in the retail crypto exchange sphere, but more to provide a venue for the market makers of those venues to sort of interact with each other and essentially risk reduce. So yeah, maybe a little bit too much crypto in our conversation today and less tokenization, but actually, exactly to your point, we have found that we've been busy for the last 5.5 years doing this. Undeniable that last year sort of changed things up a little bit. We spoke a little bit about it earlier, but I think the dynamics in 21 and sort of what rolled into 22 were that clients were quite happy to take the whole reward over risk piece in their sort of daily stride. There were lots of opportunities. They were interacting with firms that perhaps weren't set up in the traditional way. And, you know, there were lots of opportunities to make money. And then, you know, one black swan event after another, and then after, when we thought it was all over, we had a banking crisis for the space. The infrastructure was pretty beaten up, and then suddenly something clicked, and our clients have had to sort of rein it all in a little bit and start thinking about how they do this properly.
So how do they do this properly?
I knew that was going to be the question. Well, I guess,
like, how are the things they're asking for and they're looking for now different to 21?
Yeah,
because
so
they are markedly different, right?
The biggest piece for us in the last year has been sort of setting ourselves up in a much better way operationally. So we went to market where we did quite a few things, and that absolutely wouldn't have been what we were used to, but the infrastructure wasn't there. So if we're going to try and onboard a bunch of institutional counterparties that trade crypto, and you don't have a bank to look after their assets like you would do for all of our FX business, you have to go and look for some solution for custody. And quite frankly, in 2017, that was a bunch of hot wallet providers. Now, would you feel comfortable putting your clients' funds in a dodgy bank? No. Would you be comfortable putting their assets online subject to hacking risk? No. So we actually end up building a proprietary custody solution. Now, there's been a ton of custody chats today. We don't have a brand today for custody, but we had to do that. And now, you know, the kind of clients we're dealing with look different. So they're not a whole host of crypto native guys who are just seeing a trading opportunity and a way to make money. They are the more sophisticated buyer-side clients who are looking at this asset class more seriously, and actually they're not allowed to interact with somebody that performs all those functions. So that concept of operating the vertically operated model versus, okay, let's get set up properly to be more horizontal in the way that we do things, or, you know, maybe the firms that were doing too many things have kind of filtered out or focused on one. For us specifically, we still are operating our custody, but it's separated now. It's incorporated and it's going through a regulatory process that looks different to what it would have looked like a couple of years ago.
And on that point around, I guess, the market structure changing, 2-3 years ago, even less so now, but still existent, is the sense of the sort of vertical market structure in crypto, which doesn't exist in the same way in traditional asset classes, for example, FX, that you sort of started from and came from. Do you think that's a good thing, how that change has happened, both for you and for the industry?
Yeah, I think when we went to market, it almost didn't feel like the right thing to be doing. We weren't used to that, but actually there was quite a clear lack of infrastructure. So it was kind of like a speed to market, let's get going, this is the way to do it. So I don't think it was necessarily what happened last year that you went, damn, that makes sense now. Like, it was always on the cards, but the infrastructure was just light and it didn't exist. So it can only be a good thing. We've seen any of the real firms in this crypto sphere right now are spending their time whilst volatility's pretty low. You know, there's not been too much going on in the market in the last 12 months. I think it's allowed us all to set up properly, to separate the entities out, to go and get the separate regulations. I mean, the whole regulatory piece right now is pretty sporadic. We've had a lack of clarity for a long time. We're starting to see some signs of life. So we've been set up in one jurisdiction, but we have 2 pending regulations in 2 completely different jurisdictions. Part of that is being ready for MiCA, moving away from where we feel, you know, our particular regulation right now actually it allows us to be a venue and a custody under the same DLT license. Now, is that progressive enough in the world that we're living in, that we're moving towards, for the real money to enter the space? Will that help institutional adoption? I don't think so. So, you know, being in Singapore, being set up in Europe, they're all important to showing that, you know, you can ask for financials, you can do as much DD as you want on us. It's okay, we're happy to do mutual KYC, because we want to show that we're trying to do this properly. Because guess what, guys? When the buy-side clients are ready to actively trade spot crypto, they're just not going to be able to do it as we've operated for a few years from sort of 2017, 2018 onwards.
And in terms of clients, I mean, we're talking about sort of institutional adoption of crypto, and you mentioned obviously the volatility is low, activity has been quite low this year. What sort of clients are you seeing, you know, the real money clients are you seeing right now? And I guess looking to maybe later this year, maybe early next year, the notion of a spot Bitcoin ETF, how important is that for you, for the industry? How are you looking at that?
Lots of questions. So yeah, I guess at the beginning when we launched, crypto native funds were really quite common. Some of those sort of dwindled away last year. They were heavily concentrated at certain venues, and that hasn't worked out. The HFTs for us have never gone away, but they've definitely looked to reduce their exposure across the board of, you know, there are hundreds of exchanges out there. A lot of them you've never heard of. And I definitely think there's been a flight to quality on the exchange front, and we've reaped the benefits of that. It's interesting because when we were onboarding the likes of these crypto natives, they had no concept of everything that we're used to from traditional asset classes. So low latency trading, high throughput tech, you know, it just wasn't a concept, because if you go and you market make on a venue, a retail venue where there are 100 million users plus, you don't actually have to be that good. You don't have to actually be that sophisticated. I think, you know, the arbitrage opportunities for those clients has definitely closed, because the market's just not so volatile anymore. But also that whole big, we'll take all the reward and don't worry about the risk, that has to go away now as well. And then the other client type is the real money asset manager. Now, I feel like I've been talking about institutional adoption for 5 years and saying it's coming. It was definitely halted. There's no way that the buy-side guys could have continued to go full steam ahead towards the end of last year, because you have to go, whoa, in every asset class there are sort of bad events, but I can only think of sort of 2 in my 15 years at LMAX that were FX related. And then in crypto, we had like 5 or 6 in a few months. And then the whole banking, like there was a lot going on. So definitely things slowed down. But it feels like the momentum is there. And then to get onto your ETF point, a spot Bitcoin ETF is huge. Everything's always revolved around a future. This is big for us. We're a spot venue. We're institutional only. I don't think there are many exchanges outside of Coinbase that trade more Bitcoin every day than us. And we are a constituent of the indices that the spot ETFs will reference as a price. So we see ourselves as a big player in the ecosystem. I think the ETF piece is, investors are creatures of habit. When they looked at Bitcoin a few years ago, it's quite complicated, and not knowing enough about it led to the 1 to 2 to 3 year sort of mapping out exercise. If you bring an ETF into the ecosystem that investors are used to, they're quite comfortable. We like this, we know how it works, we're very used to them in other asset classes. We've seen how much they can grow. The whole gold ETF gets referenced a lot as we approach the approval of a spot Bitcoin ETF, and I say that because we really do believe we'll see an approval in the next 3 to 6 months. We think it's huge. It opens up this asset class to a new type of investor, and in addition, I think we're going to see that coupled with the Bitcoin halving next year. I think that was mentioned a minute ago on the previous slide. The stats say that a Bitcoin halving leads to a big Bitcoin price rise. We don't see it as any different coupled with the ETF. I think we're into really big things next year from a market sort of volatility and Bitcoin price increase. And yeah, we do speak about Bitcoin a lot when we talk about crypto, but as an institutional venue, 95% of our trading is Bitcoin and Ethereum. The other stuff's kind of immaterial.
Have you been having conversations with clients who at the moment aren't trading, but are interested in trading and looking at the Bitcoin ETF as when that comes, that is something, like you said, that's familiar to us, that we understand? Like how are the people that you speak to like thinking about this?
Yeah, definitely. I mean, those clients are typically playing around with some prop money, just to get a feel for the space. But yeah, for them, the ETF will be what allows them to enter the space. It's also, for me, for us, I see that this is almost like a signal from the US regulators that the next step would be regulation, which is, I think we've spent a lot of this year and the end of last, we've seen our clients run for the hills in terms of getting out of the States. Even if they're not US entities and they're in some way or another set up as an offshore entity, ultimately they're still linked to their US counterparts. That has to be a temporary measure, right? Half of the world's assets sit at the top 3 US custodian banks. If this is going to become a real asset class, the US needs to be present and needs to regulate this. Now, I think it's become pretty political in the States, and the ETF will sort of be a sign, I think, for us to see some regulation in the States, but also that momentum that we're seeing across the rest of the globe. There are a lot of regulators out there now that are feeling the pressure to become a crypto hub. So that's good, right? Creates a little bit of competition.
You preempted what I was going to ask, because we're in London, we have to talk about the UK regulations that came out. What do you make of how the FCA, the Treasury, are thinking about the industry now?
Yeah, so we're a UK hub on the FX front, and we can't be on the crypto front, which is unfortunate. We spoke to the FCA in 2017 ahead of launching LMAX Digital. There was nothing to be done at that point, but of course we eagerly await a framework. It's always framework driven for us. Wherever there becomes one, we'll follow that trend and apply for the regulation. not regulating the asset, but regulating the activity is great. We see that as a really positive sign. We took part in the consultation. We'll be taking part in the stablecoin consultation. I guess it's just timing, but it's really exciting for us. Like, I'd rather not have satellite offices all around the world for the sake of regs when we could sit here. We're regulated as an MTF and a broker by the FCA, so it would only make sense to include our crypto business too. So yeah, really excited. Is it next year? I don't know. But we'll wait and we'll be part of that as soon as we can be.
And it's all, like you were saying earlier about the integration of the industry sort of shaping more into traditional like FX markets. The regulation seems to be bringing in or putting in place a lot of the traditional financial services regulation on top of crypto. Like, do you think that the industry is eventually going to sort of morph into what we know and what exists today, as opposed to being sort of coming in from the, it was born out of retail trading and coming in from the outside?
Yeah, we think so. It makes it easier as well. Otherwise, you end up just operating all these different setups, which you kind of end up always referring back to how we do it with the FCA on the FX side. So, yeah, same risk, same regulatory outcome would be how we would do it too. So that kind of fills us with confidence that we'll get there.
Great. Well, I think that's sort of all we have time for. So thank you so much, Jenna. Thank you, everyone, for listening and joining us.
I actually have one question. Yeah, just one question. Crypto as the proof of concept implies that something much bigger is coming. And you're a first mover, Jenna, in the sense you're already active. Are you getting an advantage? What are you learning? What capabilities are you building today that the people that aren't already doing what you're doing are potentially not capturing? What is this first mover advantage that you're going to use when this is no longer a proof of concept?
Yeah, good question. We've actually been really busy for the last 5 years, but last year, the last 12 months has allowed us to free up a little bit of time to start thinking about what's next. So I think for us, it's a lot of blockchain proliferation and how do we use what we've learned over the last 5 years. Now, it comes in a number of different subjects, but obviously we do FX. But yeah, if you try and settle FX in the real world today, it takes you 2 days. So it's the idea of using blockchain tech to reduce settlement times. We're looking at some ideas around DeFi, the idea of a hybrid model. So maybe it's not completely CeFi, which is a little bit alien for us because we operate CeFi exchanges in all asset classes, but could that bring something new to the table? A few things on the go. We're not ready to announce anything yet, but definitely thinking about sort of decentralized finance and changing capital markets.
Thank you very much. The point of all of that is if you're not playing, you're being left behind. And so thank you very much, Nikou and Jenna.